The year is 2025. A trade war rages between the world's two economic titans, the United States and China. At the heart of this conflict lies a question that has captivated economists, politicians, and conspiracy theorists alike. What drove President Trump to ignite this high-stakes battle? Was it merely a negotiating tactic to protect American interests? Or did Trump have a grander, more audacious goal in mind? To cripple China's economic ascent and maintain American dominance on the world stage? This essay delves into the intricate web of the U.S. China trade war, exploring the motivations behind Trump's aggressive tariff strategy. We'll examine the intended and unintended consequences of this economic conflict, analyzing whether it represents a shrewd power play or a colossal miscalculation with far-reaching implications for the global order. Before we dive into the complexities of the trade war, let's first demystify the weapon at its core: tariffs. In simple terms, tariffs are taxes imposed on goods imported from other countries. Imagine you're buying a stylish Italian leather jacket. A tariff on Italian clothing means you'll have to pay extra for that jacket, making American-made alternatives more appealing. Governments implement tariffs for several reasons. Firstly, they act as protective barriers for domestic industries. By making foreign goods more expensive, tariffs encourage consumers to buy locally, shielding domestic businesses from foreign competition. Secondly, tariffs generate revenue for the government, which can be used to fund various programs or reduce the budget deficit. However, as we'll see, tariffs are a double-edged sword, often leading to unintended consequences that can harm the very economies they aim to protect. The seeds of the U.S. China trade war were sown in early 2018 when the Trump administration, citing concerns over unfair trade practices and intellectual property theft, slapped a 10% tariff on a wide range of Chinese imports. This initial salvo marked the beginning of a tit-for-tat tariff battle that would escalate dramatically in the months to come. In April 2018, Trump upped the ante, raising tariffs on $200 billion worth of Chinese goods to a staggering 25%. The move sent shockwaves through global markets as businesses and investors grappled with the uncertainty of a full-blown trade war. A glimmer of hope emerged in May 2019, when Trump, in anticipation of renewed trade talks, proposed a reduction in tariffs to 15%. However, this concession proved short-lived, and the trade war continued to simmer, casting a long shadow over the global economy. The Trump administration's stated goals for the trade war were threefold: to force China to open its market to US goods, reduce the gaping US trade deficit, and protect American industries from what it deemed unfair Chinese competition. However, lurking beneath these seemingly reasonable objectives was a more ominous theory, a conspiracy theory whispered in the halls of power and debated fiercely in the media. This theory posits that Trump's true aim was far grander than mere economic bargaining. It suggests that the tariffs were a calculated maneuver in a much larger geopolitical chess game, an attempt to halt China's inexorable rise as a global superpower. By crippling China's economic engine, so the theory goes, Trump sought to preserve American hegemony and prevent the emergence of a new world order with China at its helm. Central to the trade war narrative is the stark trade imbalance between the United States and China. For decades, China has enjoyed a significant trade surplus with the United States, exporting far more goods than it imports. In 2017, for instance, the U.S. trade deficit with China reached a record $375 billion. This disparity, argued the Trump administration, was evidence of unfair trade practices and a drain on the American economy. Proponents of the tariff war argued that China, due to its reliance on the US market, was more vulnerable to tariffs and therefore more likely to cave to American pressure. They believed that the tariffs would force China to make concessions, opening up its market to US goods and rebalancing the trade equation. However, as we'll explore in the next section, this assumption proved to be a miscalculation, as China retaliated with tariffs of its own and sought to reduce its dependence on the US market. The Trump administration's tariffs had unintended consequences, hurting businesses and consumers at home and abroad. American businesses reliant on Chinese imports were caught in the crossfire. Wild Rye, a Wyoming clothing company, had to raise prices and lay off employees. The tariffs disrupted supply chains and increased costs. Businesses across industries struggled with rising costs and dwindling profits. The tariffs also destabilized global markets, fueling volatility. Market uncertainty eroded investor confidence and dragged down stock prices. American consumers faced higher prices for goods. The price hikes hit lower-income households particularly hard. Budgets were squeezed, forcing cutbacks on essential expenses. China retaliated with tariffs on American exports, like soybeans and pork. These counter-tariffs hurt American farmers and rural communities. The U.S. China trade war has sparked fierce debate among economists and policymakers, with some arguing it's a shrewd power play by the Trump administration, while others see it as a strategic blunder with disastrous consequences. Proponents argue tariffs protect American jobs and intellectual property, forcing China to adopt fairer trade practices. Critics argue it harms the US economy without changing China's behavior. The long-term consequences remain uncertain. As the trade war raged on, casting a pall over the global economy, a glimmer of hope emerged in the spring of 2025. High-level trade talks between the US and China resumed in Geneva, Switzerland. Led by U.S. Treasury Secretary Scott Bessent and Chinese Vice Premier He Feng, the talks aimed to de-escalate the trade war. The stakes were high for both sides. The U.S. economy showed signs of strain, with manufacturing slowing and investments delayed. China faced slowing growth and rising debt. The Geneva talks offered a chance to reset and find common ground. As the world watches the Geneva talks with bated breath, the long-term consequences of the U.S.-China trade war remain shrouded in uncertainty. Will the two economic giants find a way to coexist peacefully and manage their differences through dialogue and compromise? Or will the trade war morph into a protracted Cold War, dividing the world into competing economic blocs and stifling global growth? The trade war has already begun to reshape the geopolitical landscape. China, facing pressure from the US, has sought to strengthen ties with other countries, particularly in Asia and Europe. The US, meanwhile, has taken a more protectionist stance, withdrawing from multilateral trade agreements and questioning the rules-based trading system that it helped create. The outcome of this power struggle will have profound implications for the global order. Will the US maintain its position as the world's sole superpower, or will we see the emergence of a multipolar world, with China and other rising powers challenging American dominance? Only time will tell what the ultimate legacy of the U.S. China trade war will be. However, one thing is certain: the world is watching, and the stakes couldn't be higher.